yesterday's range low to range high. Okay, see that? Range low to range high, period. This is in the futures. Now, yesterday's 50% line is the big black line. Now, Gann, W.D. Gann, who was a pioneer in the trading industry, came out and understood that halves work very well, eighths, quarters. So if we look at this, we have 0, 12.5, right? 25%, 37.5%, 50%, 62.5%, 75%, 87.5%, 100%. So I structure our day based on yesterday going forward. So today the market opened, right? So I look at the 15-minute chart and I do the same thing and I set it up. Hold on a second. Let me just go here. So now you see the structure. That's the 15-minute chart. And then what I do the same thing on the 1-minute chart. This is where we enter. Higher time frame, lower time frame. You guys got me? Higher time frame, lower time frame. So I want you to understand something, guys. The market opened in the middle of yesterday's range. Okay? Opened yesterday's range. So although this right here, because I know some of you are wondering, what do you mean opened? Looks like it's been going all day. Okay, all this is considered the night session, the Globex session. It trades 24 hours. However, at 9:30 in the morning until 4 p.m. Eastern, here's what happens. The U.S. stock market is opened. So all the volatility happens from 9:30 till 4 p.m. Okay? Understand. All the action goes from 9:30. Now all the volume starts hitting right at 9:30. Everybody's buying. Everybody's selling. Right? Everybody's buying and selling. So if you have 100 people, I am sure half of them want to buy, half of them want to sell. Think about that. Right? So we're right here in the middle of yesterday's range. The market opens, the U.S. stock market opens, and now the futures start to react to that. We trade the futures. So what happened? Right here. You see this? Right here. Think of this as a rubber band. Okay, watch. Think of it as a rubber band. Rubber band stretches out, rubber band stretches back. Rubber band goes back to normal. Okay, rubber band. Boop, 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 like that, right? In the beginning, off the market open, you're going to have that rubber band effect. Okay, it's going to do that. This is where we utilize our levels and we understand price action. We wait, we watch to see if the market's hitting. Hold on, please. So, all we're doing is we're watching price action. Now, you guys hear about price action all the time, but nobody knows what it means, right? Here's price action. Market opens, tests a level, backing off. As soon as it backs off, you sell it. You put your stop right above there. Rubber band snaps back, you get out. Period. Period. Simple. Why? Why did I get out? Why? Okay, let's think about this. Now, let me explain why.
Order filled.
Because you're starting from the middle. You're starting from the middle, guys. Trends don't start from the middle. In the middle of the markets don't start from the middle and trend. They start from the middle and they range out. You see? They do that. I bet if I look later on today, okay? I bet if I look later on today, this is good. Ay, 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 ay. So I bet if I look later on today, this is what the action is going to be like. Okay? Now, here's where the market closed yesterday, right there. You see this? The market closed there yesterday. It opened here. It didn't go anywhere. However, had the market been here, closed yesterday here, and the New York session was here, guess what? It would trend. I want to show you an example. Let me show you an example so you understand. Watch. Okay, remember, market opened here, mess, right? Watch this now. Okay. Let's watch this, guys. I want you, this is the DAX. This is the European index. So the market opened, it closed here, right? And then opened here. You guys see that? Right? You see that? Okay. But because the next day the market opened with a large gap, what did that mean? That meant that there was buyers tilted to one side. All the people were buying. And what did that do? It trended. You see that? It trended. Why? Because it was away from this area, this whole value. So when the markets opened, the overnight markets were up, the U.S. markets were up, everything was up. It opened up and continued to trend. Follow. Next day after a trend, you tend to get range. So you have contraction, expansion, contraction. You guys understand how the market works? You have contraction, you have expansion, you have contraction. Simple. All right? So that's the nature of the beast. That's the way things work. So when we look at today's action, what do you have here? Contraction. It's not going anywhere. So when the market opened and bounced, oops.
Target filled.
When the market opened here and pushed up, all we were doing is just selling into it.
Order
move
pending.
Back down. It's not going anywhere. Range. All right, guys? Hey, but you know what, Chris? Your name is Chris. You can't lose. I got you. Where you follow? Just keep showing up. In a couple of weeks, you're going to feel like an expert. In a month, you're going to be. I'm going to let Chris answer that. What causes breakouts? It could be news. Most of the times it is news. You know, most of the time, Jeremy, it could be news. Yet the markets don't just move for no reason. There has to be an outlying factor. So it could be news that came out that everything shifts to one side and bang, okay, it just goes. All the stocks, everything's, see, all the stocks are planned to open up higher. The markets, they open up and they explode. All right? That's how the game works. If there's no news, no outliers, nothing moves, right? Yes. An algorithm to breakouts, an idea, Jeremy. Let me see if I could show you. Okay, let me see if I could show you. Something so simple you can use, Jeremy. Something so simple. Let me see if I could find a chart. Okay, it's not going to be the best chart because look what we got here. Okay. Let me see if I can just find a chart. What we call a narrow range. Okay, so let's just pick it out. Okay, it's very easy for the eye to see, and I'm going to have this programmed. But right here, you see that? You guys see this? Guys, see this? Okay. This day right here, would you agree that it's the narrowest range in the past 1, 2, 3, 4, 5, 6, 7 days? Would you agree that in the past 7 days range, that it was the lowest range, the narrowest day? That this day right here was the narrowest day in its prior 7 days. This is called an NR7. Okay, an NR7. Now, let's also look at something else. Do you agree that this bar right here was inside to this bar? Do you agree? Do you agree right here? Do you know what an inside bar means? Let me show you, okay? That's one day, and then this is the next day. An inside day means that the prior day's high was lower than the prior day's high, and the day's low was higher than the prior day's low. So this right here is an inside day. So you have an inside day plus the narrowest range in 7 days. So this becomes what's called an NR7 ID. NR7 ID. Narrowest range past 7 days and an inside day. That's the bar. You usually get expansion from that. You see that, guys? You see that? Now you could buy the high of it or sell the low of it, but you understand? You guys follow me? So that right there, NR7 ID, you can look all over the place and you find these at turning points. Market had a turning point, you find it, you're buying the highs, boom, you got it. Okay? Right here, you can see the same type of environment. We had narrow days. Here was a narrow day, narrow day. Narrow days lead to expansion. Expansion leads to contraction. Okay? I just taught you an algorithm for breakout. Do you follow me, guy? Jeremy? You know what? I plan to have it automated as an EA. I'll tell you what we have coming. You know the IML scanner? I'm now doing the IML scanner with other indicators that I've used over the years. So, we have the IML scanner for the harmonic scanner, but I have equivalent scanner, same model, but with all the other indicators. So I'm starting with another one and another one and another one. So the one that's coming is something I had used for many, many years. It was what we called the first cross. Now, guys who were with me at LBR, Surf, Kevin, you remember the first cross trade? Okay. Let me see if I can get my programmer to show me a picture. Okay, I won't be able to do it now, but I got so many things that I've used in the past. All right. So you remember the first cross pattern? Okay. Let's take a look. All right, let's take a look. So let me go down to like an hourly chart. I'm going to show you. I'm going to show you. And they don't show up all the times, but when you got markets that you could just look at all these different markets, game over. So right here, for example, now I have other filters we're adding, but this, that, you see that? Now, the first time the fast line crosses above the zero line after the slow line goes below the zero line. That was my former mentor business partner. She developed this. So this crosses up. That creates that first cross. It creates the sell. But we want to look at it more on, we want to look at more on a higher low, lower high type of model. So let me just show you. For example, this fits the criteria a little bit more. Well, not that one. Let me see if I can find something. Remember, I'm doing this off the cuff, guys, so I don't have anything prepared. But after turning points in the market, it's phenomenal. Phenomenal model. Okay, so right here, the first time the fast line crosses above zero after the slow line crosses below it, as you can see, it creates that cross and a sell opportunity. Okay? So we're going to have the same model that we do with our scanner. Yeah, exactly. You know, we had so much valid stuff over the years. Why let it die? So our harmonic scanner, the layout that we have with the scanner, see if I can, hold on. So the model with the scanner is we have everything laid out. I'm doing the same thing for the next scanner. So you guys are going to have multiple scanners, multiple robots that trade also. It's all included. I'm not changing the prices. You follow? Some things are going to have to be adjusted a little bit, but pennies on the dollar. This thing that I'm going to bring out is worth thousands of dollars. What am I going to charge? A couple of bucks just to cover the cost to run it? Yeah. But what I'm doing, Kevin, what I'm doing is, all right, Ryan. But what we're doing is everything's going to be automated. I'm using Fibonacci as a filter. So I'm going to use Fibonacci as a filter for it. So it's going to be hot. You're really going to love what we're doing. So I'm going to be using like Fibonacci. It's going to be really, really nice. I'm telling you, I promise you. Yeah, I'm thinking about that also. Having like a lower product that people can join. I got something right now that's going to boost the customer base, which is this right here. This product right here. Just this one indicator. Just this one indicator, I could charge 20 bucks. You know, 20 bucks. That one indicator right there, I could charge 20, 30 bucks a month, 50 bucks, whatever, 20 bucks. Stella, yes, I do a lot of market geometry in my work. There's a lot of videos out there with my work on market geometry. Let me see if I can find some work. Hold on a second. I mean, you guys can Google it, right? You guys can YouTube it. But let me look. Let me see what I got. All right. Okay. When it's finished. When it's finished. That's the indicator with the key levels in it. I'm telling you, this is the best invention ever. This GAN thing, man, this thing is the best invention ever. This thing, oh man, this thing is the best invention ever. I'm sorry, this thing is awesome. Yeah, this thing. This is straight up WD GAN stuff, man. Straight up It's all automated. It's crazy. All automated. No, that's not GAN lines. This is a whole different model. Hey guys, I did a class for TradeStation like 2 years ago, almost 3 years ago, on market geometry, the golden ratio. Watch that. Watch that video right there. That video right there, game changer. It's 3 years ago. It's an hour long. You're gonna love it. Yep. Look at this. I got another 1 or 2 auto traders coming. Traders. I got one of our own guys who's an IBO who's going to be on the traders. Like a couple of guys, they're going to be doing some trading. So I'm about to put another 2 to 3 people on FX Signals Live to boost up that. Okay. So guys, quite honestly, I'm going to sleep. No, Emery's not yet. In the future, but hopefully Emery. But I got some good guys about to come and rock with us. But quite honestly, guys, I'm about to go back to sleep. I'm going to go to sleep. Brandon, I would love to show you, but quite honestly, I've been working since yesterday. I was doing some. Oh, is tomorrow the weekend? Wow. Is that crazy? What am I going to do? So listen, guys, as of next week, we're going to have, I'm going to be using Zoom. We're not going to use this room no more. I'm getting rid of this stupid HotCom. I can't deal with it no more. People can't even get on. They're so old and antiquated. And you know what? Here's the other thing, guys. This HotCom, they were trying to sell our lists in the past, and I caught them. I flipped out on them. $1,000 for the week. Wow. How'd you guys do this week? You did good?